All right, welcome back. So let me take a sip of my coffee here. Probably gonna need some caffeine for all this nerding out we're gonna do on options. But if you don't know who I am, Ben Collins, CFA charter holder, Chief Investment Officer at Options Autopilot, which is an automated options trading platform. If you want more info on that, check out the description below. Check out optionsautopilot.com, and you can get a month trial for $45, and hopefully should help you make some money over time. So I wanted to dive into a little update here since last week. I've made some additions again in the portfolio from the kind of directional manual long side, but also kind of wanted to update on the automated options and the hedge and how those are kind of interacting and kind of my views going forward and what I may or may not do depending on what the market does. So let's kind of just dive into it straight away. If you've been following along, or if you haven't, definitely make sure you subscribe and like, because I'm showing all the transparency, the good, the bad here, and just kind of showing you, how much, how I'm just going about this process, right? Again, as a disclaimer, this is not financial advice. It's all educational purposes. This is just a portion of my capital, but I kind of want to, show risk management and how I think about things, just because, I've been in the markets for quite a long time, and a lot of those thoughts went into Options Autopilot, and we tried to make those, helpful tools to manage risk. Because at the end of the day, it's all about managing risk, and hopefully people can kind of see that. I'm not making some outlandish claims, right, on how to go about things. It's all about, long-term. Life is a marathon, not a sprint, or as they say, trading is as well. So with that in mind, let's touch back on, RIVN and SOFI had been taken out of the portfolio here, and had broken down quite a bit. Now you can see that they're back in. So when it had broken this uptrend, again, whether you subscribe to technical analysis or not, in my opinion, the only reason that it might be helpful, even if you believe that it's random, is just that it helps you manage risk at a certain point. In my opinion, it does kind of show raw supply and demand. And the concept is that, people were not willing to own it at a certain price previously, and then they are. That probably signals a change in fundamentals. I do think it's better to have fundamentals line up with technicals. That should hopefully make it a stronger signal. But just in general, I was just trying to find something that maybe people would be looking at, maybe computers would be looking at for what would signal maybe a break of this uptrend. And this was this, and I ended up getting out here. So I didn't get out right as it broke. I basically got out because it gapped down and then closed, and then I got out on a close, kind of confirmation of breaking that trend. And then it fell all the way down here. I didn't get back in. I was kind of wanting it to get back down to this trend line in here, but it did end up, then it kind of spiked back, pulled back a little bit. I ended up getting in right around this area, like right around this kind of resistance line. One of the reasons for that was actually I was impressed. I mean, again, I still think that the company has a good R2 and all those types of things are going to be positive, right? A lot of that stuff was maybe getting priced in, and then it pulled back here. It's like, okay, maybe dip a toe in the water again. But one of the reasons I did that is a bunch of social media YouTubers had started to talk about the R2 launch, and it was very coordinated. So clearly RIVN is smart enough to know that a lot of the YouTuber, influencers and like car reviewers today kind of drive a lot of the market and the interest. One of the people, Doug Namiro, I'm a car guy. I don't like Doug as much as I used to because he's kind of gotten old, his whole shtick. But again, he's a car enthusiast. I'm a car enthusiast. It's fun to see. He did a review of the R2, and if you want to go check it out, I guess I can link it in the description there. Pretty positive. And again, I've heard that from actual owners as well in terms of the other R1 and R1S. I won't rehash it here, but anyways, I saw they were rolling that out, and I figured it probably would be positive. And Doug is critical if he doesn't like something. I'll be curious to see what some of the other YouTubers say, but I was like, okay, they're getting on their kind of social media cycle. I think that's smart from a business standpoint. I should have known this, and I should have paid more attention to it. It had earnings then 2 days later after I put my position back on. Um, and again, I didn't go like full position, right? 5 contracts. I just started small. And in general, like you saw, I mean, I cut my position. I was down, I think like $1,500. Yeah, 1,200. So I was down like 1,200, and I cut my position as I was supposed to. Now I put my position back on because I do kind of think it was getting oversold, and thought there could be some more positive news. Like I said, seeing that from the reviewers gave me a little more confidence. Some of the points they made and some of the things they pointed out, I think was positive. I think other people would think that, and potential consumers would think that. Another thing that he had mentioned is this is a global rollout for R2, and that's probably more supportive than just thinking, oh yeah, whether news flow for EVs in the US is good or bad. Um, it is going to be global, not just the US focused. So when they roll that out, hopefully that means there should be better adoption and obviously a larger market for it to roll out to. So that was kind of the thesis of dipping my toe back in. I'm up a little bit. I'm probably not going to add at this point, but you can kind of see obviously earnings were positive. It gapped up pretty big, so that was a nice, again, surprise, I guess. I was thinking of have it over more time, but it's good that that kind of gapped up, but it did then now sell off, right? And if it might fill this gap, which would be a little bit disappointing that it would give it all back. Market's kind of telling me I'm not really correct, but I do have a little bit of profit cushion here. So if it breaks back below here, I'll probably cut it again, and kind of stay out for the foreseeable future. But I would like to see it hold here. If it makes a new high above this, I will add to my position probably another 5 contracts. Is kind of my plan. Then again, depending on what what any kind of algorithms see, or what traders see, if you kind of extend this, oftentimes this is going to become resistance. So if it can get through this and get back to the old high, well, I guess it isn't the old high, it's more recent old high. It's actually been way higher than this, and it can get above that, again, all positive for continuation. But that's just remains to be seen. I'm again focus on the risk management. Don't even follow what I'm doing, or on positions, doesn't really matter, right? Just approach similar positions this way, and I kind of always do that from a directional standpoint. SOFI is another one. Again, I still like the stock. I think it's going to go higher long term. When some of the news flow was kind of negative and the economy is a little bit, negative, interest rates are kind of pricing that or showing that. We'll go over that in a little bit later. And obviously this chart is not positive, right? This is basically looking like a kind of top. It almost looks like it's played out the distance it should. In my opinion, though, this is potentially rolling over. So if this makes a new low, that probably means the trend is going to continue down. So as of right now, I'm going to hold my current position until it recaptures above 24.50, basically. That's a pretty big line in the sand, as I've highlighted previously, because that was like the previous kind of all-time high for the stock before it broke out over here. So now it's likely going to use this with support. Now it's going to be resistance. If it can capture and close above that, that'll give me a little more confidence that the market is thinking that the stock is worth owning above previous levels, and I'm going to add to my position there, and I'm assuming it's going to line up with some type of fundamental news. I know I've been saying this for a while. I still feel like they should acquire some type of broker dealer or something for the business. I don't know if that's ever going to happen. Maybe that's a dumb investment for them, but I could just see it happening. I think it'd be smart for them to do that. So that's the update there. Intel, not doing so hot lately. Obviously, I'm still up decently on the year in Intel, but since I kind of de-risked and shifted my position there, it has not been positive, has not continued, and this is looking a little toppy. I was hoping that it was going to start to move again to the upside. Again, I think some of the story of AI build out and all these things and all these needed chips is getting a little bit overdone. I still think that Intel could benefit from a PC cycle, or if they can get a little more traction and take back some market share on the PC side, and then maybe on the server side, and help out all these companies build their chips. Again, a lot of potential positive news could come out there, but we've seen quite a bit of it. So we'll see as of now. For the most part, long story short, I'm like sitting on my hands on a lot of the directional stuff, and not really adding. I mean, I've talked about adding other positions as well, but I will update. So make sure you subscribe as I do that, and then how I'm kind of approaching it in general. Let's look at the VIX. The VIX has come off a little bit, but obviously it's hanging around the historical average. Again, a decent time to be premium selling in terms of volatility and options selling, just with around this kind of average time frame or the average volatility level. It should give you decent premiums and should help you be more profitable. Obviously, you can see it can stay down below the average for extended periods of time and then kind of spike back up. And obviously, that's where we want to manage our risk. But the automations kind of manage the different volatility for me by just constantly selling. 4 days of the week, I'm putting on a position unless I've hit an allocation limit or I've hit a position limit, or it detects an interference of another trade. So this is kind of the whole strategy, right? So we should be able to be putting volatility positions on around this average, and we're going to add some things here to hopefully we can increase the positions while it's over the average volatility level. I think in long term that will help profitability. So that's something Zach and I are working on at the moment. But let's kind of dive into the automations here. Oh, what I did want to mention was bonds. So we'll use TLT as kind of a proxy for long-term bonds, right? I was doing the bond futures trades. I guess we can just show that because doing bond futures options, that is. I was doing the 111s, kind of paused it, and it did look like it was on the downtrend. Remember, this is with rates going up. If the bond prices are going down, it's inverse relationship. But now it kind of looks like the market is maybe concerned about overall economic activity, job growth, whatever it is, and they are buying treasuries again for kind of a safe haven. At least it seems like it, right? Gold has gotten sold off as well. If you look at kind of gold futures, nothing crazy. Obviously, the uptrend's still intact, but definitely has not recaptured that high. So I don't know what to make of that necessarily. It's almost seems like risk management or people kind of taking profits because obviously it's already had a pretty big rip for 2026 year to date. And if you held it from 2025 to now, you're up significantly. So my guess is it's kind of some profit taking there in general. So at crude oil, again, I don't have any automations on gold, bonds, or oil at the moment, but I might introduce those back in the near term here. Oil's just hanging in there, kind of looks a little like wants to pull back some, but again, we'll see. Interesting to see that it's kind of rebounding here. Again, I think the 111 works well on oil typically. Long term, I think the trend is at least flat to higher. They obviously try and keep the prices up unless there was some reason they wanted to try and dump them. But just gives diversification. It's only would be about 10% of the portfolio or 15% at most in terms of short volatility positions, just as diversification, as I mentioned. So let's just look at the S&P. This is the MES, and then this is the hedge, as I've kind of mentioned. This is a long put spread that I have on. And you can see actually for year to date, it's up money. I wouldn't necessarily expect that in the long term. It's just that the market has kind of been in a bit of a downtrend or flat to down, I would say, and volatility is up since I put it on. But you can see I'm still actually profitable on the 1-on-1 MES trades in general. These are all from automations. So these are just automatically gone on. This was put on manually. We're going to implement the ability to kind of manage those together from an automated standpoint. We're just working on figuring that out right now. But you can kind of see market's looking a little toppy. I would say in here, looked like it was a fake out breakdown. I've kind of mentioned this in past videos. If it can hold in here and then make a new high, then again, path least resistance is higher. It makes a new low here and breaks below this. I think that points to more downside, and my guess is I would get stopped out of some of my other long positions. But that's the whole point of risk management, because if the market wants to go one way, you don't necessarily want to fight the tape, they say, or trend is your friend. I don't know that that's statistically been proven. I think that it makes sense, but usually the best idea is to be long, because the market goes up 2/3 of the time versus down. But you don't want to, like I said, fight the tape. Let's go look at kind of year-to-date activity. I think when we last spoke, or the most recent high in terms of year-to-date gain was around $5,100. So we've pulled back a little bit from that. I think a lot of that was from Intel coming back off. And I had obviously changed my position, so it was somewhat helpful. I reduced my position, but it still, has lost me some money since I made that change. In general, you can kind of see, again, it's not all profits, right? So anyone who tries to tell you differently is just trying to sell something I don't think is helpful. Because I took a loss in SOFI so far, and then I took a loss in RIVN. Obviously, I have those positions back on, but you can kind of see the idea is to hopefully get some winners like this to counter some of these losers. And all the MESs are automated, so up roughly $1,200 some dollars in terms of P&L open. The interesting thing here, and I've talked about this before, this is like kind of unprecedented, is that my average kind of days open is higher than ever. You can see that my P&L open this is everything that's still open, hasn't closed, and then my P&L year to date is, I believe, what has closed. I need to double check that with Zach to make sure that is what it is calculating. But either way, it's just showing what you've done total year to date, and most of the profit is still open from last year. So if we go in, I'm trying to think of what's going to show from average time in trade 44 days. So that's just the average. Obviously, this was opened, I believe, late last year. But it's just crazy because it's typically been between 32 and 33 days. So now that's significantly increased in the new year. So again, you can kind of see a bunch of the P&L lifetime, because these were opened, I believe, in November, when I was kind of starting to try and pay my rent with just automated options. This has a much lower average time in trade. Again, 100% win rate, not going to be true in the long run, but I'd say it's going to be roughly 85 to 88% when it's all said and done, and we have a bunch of instances to show. So just kind of going through here to kind of show what this looks like, how it's showing you, open. So again, I guess I should have pointed this out. Like anything that says no P&L year to date means nothing has closed so far this year. And again, that's just kind of showing how long these trades are staying open, because that is kind of unprecedented. Let's see if it'll show this. Yeah, so days open. So I think this must be the average, 58. But you can see some are 57, 40, 40, 13, 58. Okay, that's just the longest. So, but they're definitely on the long side, right? The shorter ones are all ones that have gone on more recently, but definitely longer than I've ever experienced, I would say, so far. So that's been interesting that nothing has really rolled off or come off yet. It's just kind of been trading sideways. But on the bright side, we are, making money even though the market's going sideways, and that's one of the benefits of the one-on-one. Again, capital requirement being about $10,000 for, I want to say this is the combination of MES and ES. So I am getting a little bit of credit for having this hedge on. It would typically probably be higher. I need to confirm that with Tasty, just because I don't want to mislead you. But even then, you can kind of see that the positions being up approximately $1,200 on 10,000 of capital requirement is a 12% return effectively, right, over not even a 2-month time frame. So that's kind of close to in line what I would expect with a return on margin risk, for example. And again, that's why I was trying to target $3,015 on $30,000. Obviously, I've moved money in and out of this account over this year. But I'm just trying to leave this stuff on and let it go. And I don't even have like max positions on at this point. So the other benefit of having the system recognize when you have a position on and it kind of would interfere with the leg, and it not putting it on one hand, we're going to probably adjust that so that it'll at least put on the same or a similar position, just so you can kind of get more positions on, because in the long run, the more frequency you can do this, the better you get, or the closer you get to statistical, I guess, averages. So what I mean, all that is to say is right now I think it's beneficial because when it sits around and it's going to be putting on a similar position, but it's not different enough that it might interfere with one of your current positions, it's kind of avoiding doing the exact same trade too much in one location of the market, for lack of a better term. So I think that's kind of beneficial. Again, in general, the highlight, you can see the effective delta. I'm technically more short than I am long, but there's obviously a bit more gamma here than here, because number of contracts and everything there. But my theta is pretty significant, right? So $3 here, almost $4 a day that I'm losing by holding this open, but I'm gaining theoretically 120, almost $124 a day. So the net is about 120 bucks a day that I should be benefiting. Again, theta does not actually come off that predictably, unless the market or anything doesn't move, right? So that's just a rough idea just to show you that, I can keep my hedge on because it's so long dated. The decay on the theta decay that's going against me is very low. It's because 276 days, right? I did almost a year. And again, as I get some more profits and more positions close, I may choose to pull this hedge off at some point or adjust it. And the reason is, like, when you're starting out in the beginning of the year, I kind of want to have a bit of a hedge against sequence of return risk. Again, in the long term, it might not even matter, right? If I did a back test of should I have a hedge on at the beginning or not, it's just I kind of mentally like it right now, and I obviously still had a decent amount of positions going into the end of the year and then into the new year. And because there was kind of some uncertainty, I just wanted to do it. So I had it on there and just show the idea that you could have protection just separate, even though the one-on-one has its own protection built into the positions already. Technically, if the market falls slow enough, you can benefit almost like you have a put spread on. But I just wanted to put a separate one on just to show how that goes, and just also see myself how that acted in reality. And so far, I've kind of liked it. These two have kind of balanced each other out, and then I'm obviously gaining more value from the theta decay over time. You can see overall with all the positions, it's still only at 30% profit. The target's about 63%, so I could make a little over double this, right? In general, so I'm going to guess it'd be close to $2,500 if all these close at their profit targets. So we'll see, remains to be seen. But if it starts to move against me, right, this should pick up some of those. And then as this is hopefully helping me hedge, I'm selling more of this, the automation. I'm not doing the options autopilot, just doing it. And that's why it can work out over time, right? It kind of just smooths it out. It doesn't prevent losses fully, but it smooths out the return profile and then the experience that you have with it, right? So that's pretty much it from the market updates and the portfolio update standpoint. I mean, as update on 0DT, we're still working on that. We mostly have it figured out. It'll be a little bit until we release that on options autopilot, because as I mentioned, I think you can kind of achieve similar / better results, or I would say more mentally healthy results by doing it just on a daily basis and more longer term. I think that's the better route to go. At least that's my opinion. But again, good to have diversification and ability to do what you would like to do, because maybe you want to do long-term positions and then do very short, 0DT against it. So we want to have that ability, and that's what we're working on as well. So appreciate everyone watching. Again, hopefully you like that. Subscribe for some future updates and positions that I'm going to add and how we kind of update the platform in general. And stay tuned. And again, always manage your risk and live to trade another day. Talk to you soon.